Sometimes when it comes to trading, you have first of all to understand this. It will come into a time when what you want to do in trading is not actually playing. The price action itself is not actually moving. You are willing to, like maybe for example, you're looking for the buys, you've already executed the buys, but unfortunately, the price is not playing towards your direction. I go by the name KIMSY. Welcome to my channel. Of course, I'm a full-time trader. I do small account trading, at the same time I do big account trading. I don't do account management. I don't do signal provision. It's just for education purposes. So today we are going to cover different things. I'm going to show you from the word go that sometimes when it comes to trading, you might also execute a trade, but unfortunately it doesn't go towards your direction. So you have to pay much attention. It will come into, especially on like you've heard people saying they have a specific month when they don't trade. Especially this happens when we are shifting from one quarter to another. Especially that is March, April, we have September, December going to January. Why does the price not actually play? So the question is, when you're having this kind of a system, which always play, unfortunately it comes into a place whereby, or maybe a time when the price action is not playing, doesn't mean you're gonna change your strategy. The answer is very simple. No. You have to understand and then you have to master. Especially when we're having the dumping of the bonds, there are a lot of things which actually happens. So I'm going to take you through whereby we shall be covering on how we do the market analysis. You have to understand first of all, the way I trade is very simple. I have first of all to understand what actually moves the price. That is number one. The second thing, I have now to understand where the price will start now moving from. And that is now when we cover the technical analysis. So the fundamental analysis is going to cover the direction of the market, then the technical analysis where we are going to get in, and then where we are going to get out. So consider subscribing, consider liking the video, and also share with your friends so that at least we can get into the business. So having said that one, it's high time we should get into the charts. I really appreciate you guys. Welcome back. Let's go to the charts and see the way forward. When it comes to trading, the most thing, one of the things that leads to most of people suffering, it's because you don't have a systematic way of approaching your trading journey. When you wake up early in the morning, this is how you get most of the time people doing. The reason why I'm talking about this is because I've been into the industry for 4 good years, 3 years of losses, and then 1 year progress, and I would say I've learned a lot. So here's the problem. When you wake up early in the morning, you don't have a systematic way of following, you end up losing yourself in trading. And you have to understand, first of all, you might be losing not because you have a very poor strategy. No, it's because of your psychology. Then you need to fix your psychology. And the best way to fix this psychology when it comes to trading, you need to have a systematic way of approaching this industry. How is that possible? Have you ever found yourself waking up early in the morning and the first thing that you do is just get your phone and then you happen to get into a trading view or maybe your MT5 format, whichever app or software you're using for trading. You just get into that, then you just see the price where the price is, and then you execute a buy or maybe a sell. It's because you don't have a systematic way of following. That's why when I was trying to build up everything in my industry, I have learned everything for free of charge, like by myself, after being scammed by a lot of people. And it got into a place whereby in this industry it's super amazing because you lose everything until you get into a position whereby you don't have anything more to lose. So you just sit down and concentrate learning by yourself. And then this is how I came up with a very simple approach of these markets. So you just have to have a systematic way of approaching. That's why I came up with 2 strategic ways of which you're supposed to be following. The strategy number 1, or a routine number one is where we call the weekend routine. What is the weekend routine for? You have to understand when it comes to the industry of forex, most of the people happen to contradict themselves, saying that the price is actually moving due to the technical analysis. You hear somebody, why is the price going to the upside? Somebody is telling you the reason why the price is moving to the upside is because it's making high highs, high lows, or the market is trending to the upside, or maybe you've already checked to the relative strength index and you've already seen that one pair is stronger than the other. You have to understand when you are trading forex industry, the price actually moves due to the fundamentals. The fundamentals, what are the fundamentals? It's basically how the performance of the economy. Because actually, in general, you have to check on the what we call CFDs. That is actually what forex is. Speculation of the price, whether it go up or down. And why do the price moves? It's because of the economy performance. So you need to position yourself, be able to tell whether the economy is growing or not. Like now today is the date 18th of September 2025. Yesterday on 17th, we had the Fed cutting the rates by 25 base points. So you have to understand, it's all about the economy performance. Therefore, if you can be able to tell whether the economy is kind of depreciating, kind of not growing, or it's either growing, and then you come to understand that the currency will either strengthen or depreciate. Therefore, like now, to date, I will take you through the different fundamentals which I have already done. I have an Excel sheet which I have already prepared them with the 8 major currencies. So all the pairs you can see on the screen. So let's start with the USD JPY. USD, when it comes to the fundamentals when it comes to understanding of the economy, you have to understand that the fundamentals are categorized in four. I stand in the point of correction. Yeah, I stand from the point of being corrected. But since the industry is big and you keep on learning, I have come to realize that the fundamentals are categorized in four categories. Category number one is when we talk about the labor market. Then category number two, when about the economy performance. Then we have what we call bank intervention, and then we have energy prices. So far, with the knowledge that I have managed only to cover the labor market and the economy performance. Let's go to the USD. As to date, it's already September. You've seen that September have already indicated it's kind of red, meaning that this pair or this currency is super bearish. Again, when I go to the euro, you'll see at the top it's blue, meaning this pair or this currency is bullish. At the same time, when I go to GBP, Great Pound, you can see it's already bullish. JPY, it's this color, which is like kind of grayish, meaning neutral. So it's neither bullish or bearish. At the same time, we have CHF, Swiss francs. You can see gray. This is kind of neutral. And then we have Australian dollar, which is turning now from gray to bullish. Therefore, Canadian dollar, we can see is super bearish. And then New Zealand, you can tell already is super bearish. Then let's go for only this pair or this currency, that is USD. USD, when it comes to the labor markets. The labor markets, we saw that we had jolts opening, dropped from 7.36 M to 7.16 M, which is a super bearish, meaning that there's no job creation. And therefore, if there are no job creation, you cannot be in a position to predict this pair, like this data well is coming out. I have not get into that point. Again, when it comes to the ADP, it's not possible for me to predict for this data whether it's come higher or low. But when it comes to unemployment, it's employment rate of employment change. It's possible for you to predict this. Now, this is how it is possible. Remember, when it comes to unemployment claims, we have unemployment claims which comes every Thursday over every week. It's possible for you to predict this data. It's quite easy. Let's say, for example, if the jolts opening dropped from 7 point this one. It means there were no job creation. And if there are no job creation, it means when it comes to the unemployment will be very poor. Again, when it comes to the unemployment, it will be very high. When the unemployment is very high, when the labor market is performing poorly, it means that that pair is super bearish. Again, you have first of all to understand, you've already covered the labor market. The labor market driving this kind of a currency. Once you're done with that, focus on what we call average hourly earnings. Everybody understands that when it comes to Western countries, most of them people are getting hourly. Therefore, when it comes to average hourly earnings, you have first of all to understand, are people getting paid very well or poor? Therefore, like now on this USD on September, the first week, average hourly earnings came out, or it remained at 3.0. Therefore, it was neither bullish or bearish. Therefore, it means when it comes to the CPI, it was supposed to remain almost the same. Then check on the economy performance. So in generally, we can say that USD is super bearish. Therefore, if you're that kind of a person who trades gold, if I go to the charts, if I trade on the gold, you can see that's why I'm looking for buys. Yesterday we had the interest rates coming out. So after now having the direction of the market, or the direction of the buyers, or the buyers on each and every currency, you are supposed now to come to the charts and try to check whether it's aligning. Now on the gold, it has been making high, it's had been making new highs. Again, on the chart you can tell that this price it's kind of pushing to the upside. That's why I came and I had to go to the 4-hour time frame. First of all, go to the 4-hour time frame and identify recent break of structure 4-hour time frame, and I came across this break of structure to the upside. Again, if I happen to hide every tool there, you can see we had this break to the upside. We had this order block here where I have already positioned my positions already there. Again, I have already seen there was a momentum to the upside. So I was looking for these buys. That's therefore why I have already placed this position for when it comes to gold position. Let's check on the other pair. Let's go to the, so I'm running that pair. My stop loss is around 36.25. So I'll have there. Yesterday we had the interest rates. You can see what kind of interest rates the noise which was created actually there. You see this click around here. Allow me to hide the candlestick here. Now, when it comes to the interest rates, they cut the interest rates was cut with the 25 basic points. Now, when it comes to the interest rates, after cutting, we had all this noise. Why do we have all this noise? It's because when it comes to the interest rates, it was cut, and therefore gold was supposed to be buying. But now, when it comes to press conference, all the things that they had to do, we had what we call contradiction to the statements which were being delivered. That's why even now the price is not actually kind of pushing to the upside. Then for me, for my final confirmation, I have to go to the sentiments. And I confirm. You see, now when it comes to the sentiments, I have already seen, when it comes to gold, we have 54% of people are shorting this pair. Now, on my book, let's see on the sentiments when it comes to on Monday. How has been the sentiment trend since Monday? Since Monday, we had gold. Where's gold? Yes, gold. We had 59% shorts. 59% shorts. So it means the number of shorts are getting to decrease. So the longs are kind of getting to increase. But now I have already into the buyers. So there is a high probability that this kind of a trade we might get into the liquidation. But remember, my rules has always been simple. Whenever I execute a trade, because whenever I was executing this trade, the number of shorts were actually increasing. So, but after I now executed the trade, it's kind of going against me. But now should I be going to a position where I should close the trade? Psychology. You happen to close the trade, and all of a sudden the trade happens to go into your direction. So I'm going to hold the trade, If I'm gonna lose, well and good. But if I'm not gonna lose, well and good. So remember, it's either take profit or a stop loss. Quite easy. Let's go to another pair. I'm done with the gold, so I'm hoping that gold will go to around 37.13, that's 7,200, that's 720. Let me have there. That is 720. That's 720. On the issue about let me see. On the issue about, let's go to another pair which I took at that trade. On the Canadian JPY, Canadian Japanese yen. It's already going back to my re-entry. Again, why did I take this position? I took out this position and closed around the low of this one. Yes, there was a take profit number one. Take profit number one was this low, and I'm gonna explain to you the reason why I took this trade. And again, seems like I'm going to add more trades. I'm going to get another re-entry. This was a coverage of around 91 pips. You can see on the screen. Why did I manage to take this trade? Let me go back to my fundamentals. When I go to Canadian dollar, check on the Canadian dollar. When it comes to the labor market, it has always been like it's bearish for this. The employment change came out negative. Unemployment came out very high for very high rate of unemployment. Then when it comes to the economic performance, you can see, yeah, GDP came out negative, manufacturing PMI came out negative, and then wholesale came out negative. So high probability that this trade, when it comes to the Canadian dollar, it was kinda bearish. Then, having said that, I executed that trade after the INF. Let me show you. Let me factory. I executed that trade after we had the CPI. That is Consumer Price Index for the Canadian dollar. That was back on Wednesday. Let me check. Canadian dollar. Yes. Canadian dollar. Let me check. I'm checking. Did we have the CPI? There was a data. Yes, this was not actually the CPI, but it was kinda the interest rates which came out neutral. Again, it was they had to cut their interest rates all the way from 2.75 to 2.50, which is calling for the bearish. Again, I think we had Canadian dollar CPI. Yes, here's the CPI. We had the CPI which came on Tuesday, that was monthly, which was negative. Again, we had the medium CPI, but after all these, I was much concentrating on the core CPI, which came out neutral. They dropped all the way from 0.1 to 0.0. Again, they had another drop, which is common CPI from 2.6. So it was kind of calling for the bearishness. So after I got that bearishness, data coming out, I had to go to the 4-hour time frame. Then after I went to the 4-hour time frame, this is actually what I had to look for. I want you to show. I want to show you. Let me just hide everything and zoom out. So when you try to check, we have been this kind of trend channel to the downside, these ones. Again, once I confirm that we are going to the downside, the next thing I'm supposed to cover is what you call horizontal support and resistance. So I want you to check recent break of structure and then any kind of horizontal support and resistance. So I just have to convert into the line graph. I can see we have this kind of a consolidation here. And remember, when it comes to let me just hide everything. So when it comes to horizontal support and resistance, you have to understand any resistance and support is supposed only to be a zone, but not a specific key point. This is where most of the people happen to fail, especially the beginners. You just have to confirm. You just have to understand that it's supposed to be a zone and not a what? A specific price point. Now, when I get back, you can see now the horizontal. You can see we have a possible resistance from this point. It has been tested once, tested again over here, and over again and again. So that's why when I have my tools there, you can see this kind of a red line here indicating that there is possible resistance from that zone. Now, having said that, again, for anybody who understands chart pattern, you can tell that we had this kind of a bearish flag to the upside. Again, you have to understand there is a break. There was a break of structure over here. Then we have this order block, and then within that order block, we had to confirm whether there is a BB, which is a breaker block, which has never been tested. That's why you can see my green coloring over here. So there is a high probability that this price was supposed to be dropping. How did I get to enter? Immediately after the CPI, confirm the date. Confirm the date. Let me show you. I want you to confirm the date. This one was on Tuesday, immediately after we had the CPI for the Canadian dollar. Then price pushed to the upside and gave us this kind of a, let me show you, this kind of a hammer here, inverted hammer, this one. That is exactly when I executed my trades and confirm it was on Tuesday, confirm below here, Tuesday, and then when it comes to this one, it was exactly on Tuesday. And that is now when I had to execute that trade. So then I'm looking forward to add more positions, because when you listen to ICT on the power of 3, because I have really once done that, you come to realize if you missed the opportunity on Tuesday, wait for the price to come back again to that point. Possibly there's a high probability of prices getting back to that point, and then we can have a re-entry from that point. Why did I sell? Fundamental, bro. Check on the Canadian dollar, super bearish. JPY is turning from what? Is neutral. And then the data zenye zimekuja, the data which are here kind of turn into the bullish. So there is a high probability that we shall also see that kind of a move to the downside. Now, how should I get back for the re-entry on this point? How should I do that? It's quite easy, bro. Just come, wait for another BB to be created. You can come and turn on the tool. Let me just hide everything. When I hide every tool, you can see this was the BB that I was looking for. How do I get the BB? You had to see, after taking out the liquidity to the upside, this one, yeah, the price didn't proceed. So this was the last candlestick which I was looking at. And then we had this inverted hammer. Then I took those kind of trades. Now, where should be the re-entry be? The re-entry point should be in the same. You see now, I have already gotten the hammer itself. It's already there. So I'm just going to execute another trade, and then I will be having the stop loss of 30 pips. Let me show you. It is quite easy. So I'll be having my second entry. It's quite easy. So let me turn the tool again. So this turn round, I'm getting the entry from all that point. We've already seen that. Yes. It's around, it's supposed to be around 30 pips. So I'm just going to shift all the way this one. Let me just have my screenshot of that trade again, and I'm going to have another trade all the way from here. Let me see whether it will be a coverage of around 30 pips. Yes, that's around there, Canadian dollar. So I'll have it's kind of a retest. For someone who understands the chart patterns, seems like a retest and all that. So I'm just going to have my entry points. All right. Gold is bleeding on the GJ. GJ again, I'm looking for sell, but possibly let me just have my trading what's up. Let me just have my entry point. So I'm going to have my entry point there, and again Canadian dollar, JPY. All right. Set my watch. So I'm just going to have a sell. Then on the stop loss, I'm going to have the stop loss around 25 pips. That's quite easy. That's quite okay. Yeah. So again, we shall be having, whoa. Yeah, this one is a risky trade because we shall be having GBP news which will be coming out tomorrow. We shall be having GBP. Okay, let me just have the stop loss first of all before we talk. That is 107.140. I don't trade actually before the news. Yet. It's 107. Yes, 107, 140. Card JPY. Then today we shall be having the interest. Is it the interest is we shall be having the interest rates for the GBP JPY. I've already placed that trade for the JPY. GBP JPY. and I want the Canadian dollar versus Japanese yen. Why should I be having this trade now? What the hell am I doing? That's around 32 pips. So let me just have the stop loss around there. It's quite okay because I was also looking for those pairs. So let me just modify. We shall be doing the modification. Let me just have as a trade of that's around 22.761. So that is the stop loss. Let me have for the Canadian dollar. It's quite easy. For the Canadian dollar, I'm also having a sell Canadian dollar. Those two pairs, those two trades. Then I shall be having the stop loss set at this is Canadian dollar. Yes. So I should be having it yes. So we shall be having it around there 107.150. Yes, the take profits should be below there. Yes, it's a risky trade because we shall be having Japanese yen announcing the interest rates. So probably that the price might also push to the upside. So let me just have it. So those are the only trades that I have already. Let me just go to the GJ. GJ I was also looking for a sell because it's a consolidation trade. Both pairs are bullish, so we shall be having that. Wait. Let me just go for this one. This is actually what I was looking for. I was looking for that entry all the way from there up to that position, and we shall be having a risk of that 2 pips, around that pips. Yes. So let's wait for the price and see how the price will play. Actually, I would say we are done. So we are just going to wait for the price to deliver. It's quite easy. Remember, when it comes to trading, it's super easy. You just have to set and forget. Simple as that. You just have to set and forget. Somebody will be like and ask it. Oh, bro, your charts look like a LGBTQ. God damn it, no, it doesn't. This one is just an indicator whereby I happen to see for the sessions. Again, the rest is very simple. I just have to highlight the order block. I just have to highlight any breaker block within that zone. At the same time, this one is a breakout structure. Then, this is the 50% of the Fibonacci level on the high time frame. That is the daily and all that. The daily. So we are already in the premium, so we should be looking to sell. Quite easy. So let's wait for that one. We shall be updating. Let me try to update the fundamentals. Once you set that trade, you can set and go. But I prefer doing other things. So I should be having the records. So I have only 2 trades which are running. Again, I have to set. Let me go to my what is the name? Yes, to my fundamentals. I have to cover the fundamentals which came out yesterday. That is actually on Wednesday. On Wednesday, we had today's on Thursday. This one is not much important. Current account. What is this? Difference in value between imported and exported goods, services in what? Flows and during the previous quarter. I don't think that one I don't like. I don't get to understand the correlation with the currency. So the trade balance, this is the difference between value between imported and exported goods during the reported month. This is actually what I do than the fundamentals. That one I don't have to pay much attention to that. I will pay much attention to the CPI, which is high impact news, which is for the GBP. And actually, for the yearly, it remained the same. And then we had the core CPI, GBP again, it became negative. Then, bro, why should I not be selling this? This is just a monthly copy. Just go to this one, go to the GBP itself, then go to it's under performance. This is just this one, came out neutral. That is around, this is yearly, 3.8. Yes, 3.8. So just write 3.8%, which is quite okay. 3.8. When I write this one, somebody will be confused. Don't get confused. The reason I'm writing this one, I meaning when it comes to actual is the 3 point this one, focus was 3 point this one, then the forecast was this one. So we should be looking to focus on the, yeah, it's kind of bullish. Again, for let's go for the something else. We had the core CPI yearly, which came out this one. All right. It's quite easy. So let's just wait and see. It's that simple. Somebody like, let me just cover something else. Let me try to cover something else. Yesterday we had the CPI for the GBP. Something else, we had Lagarde talking. Don't pay much attention to that because that one is not under the Nini data release. We had the CPI, which is also yearly for the USD, for the GBP, core CPI, and then this one came out equal negative. So it's bearish for that one. Let me just go there. Core CPI, paste. Then, how did the data come out? Let me check. The data came out at a negativity of 3.6, 3.7, 3.8, 6, 7, 8. That's super easy. I can memorize 3.6. Then the other one was 3.7. Then the other one was 3.8. God damn it. Then I have to mark it. Then I have to mark it red because it was bearish. Oh, my comp is lagging. It's okay then. Then Control S to save. That is GBP. That is now the data which came out yesterday. Then I will be doing the I will also do the analysis. Like I'll do the comparison later in the day. Euro, we had the Lagarde talking, nothing much to pay much attention to that. We had the final CPI, core CPI for the Euro. This is on Wednesday, which came out kind of negative for that. So we have the final CPI and then we have the final core CPI. So I'm going to write this one, 2333, 233, 2.3. This one is Euro. I'll do this one on weekend to get prepared for the data. Paste. Is it 2-3? I have seen it's 2-3. Yes, 2-3, 2-3, 2-3, 2-3. 2-3, 2-3, 2-3. That's quite well. That was neutral. Let me get, there was no increase or decrease. Let me get to the final CPI. Final CPI yearly, we had this one. Copy. We had 20. Yeah, 2021. Nice one. So let me just go and repeat. 20. I've seen it. Is yes, 2021. 20. 21. Then 21. Which was a decrease. Bearish for that one. But it might not have that kind of a high impact, but we shall be checking on that. Let's wait and see. So the next one is what? We had Canadian dollar, security building and house and all that. Then we had the Bank of Canada rate statements. And then we have the overnight rate, which came out negative for that one. They had to cut the interest rates. This one is Canadian dollar. Then we shall be covering that later. It is quite easy, but it is a lot of work. Oh, whoa. Yes, the bank intervention over it. They had to cut to from that is 2.5 to 2.5, which was a mating of it. Then they had to cut from all the way to from 2.7. Is it 7? Yeah, 7.5, which is quite easy. This one was controllers. They had to meet the forecast, so therefore it's short-term bullish, but it will still drop. That is on Canadian dollar. Let me get something else. We had Bank of that is now the press conference. I didn't get to listen to that, so I don't have much attention to that. We had the federal funds rate. This was the cutting. They met the year cutting. That is over 25 basis points. Just come. This one is under the US. With all the noise on the tariffs, boy. All the tariff noise. This pair is bullish. It's bearish as hell. 4.25. So everybody who is buying, I'm like, bro, why are you buying? 4.25 all the way from 4.5. So we'll do the coverage later. Something else we had yesterday. This on Thursday, we had this one NZD, New Zealand data coming out. We've already started executions. So we had today's on Thursday, we had our Australian dollar unemployment rates and all that. Okay, yeah. Let me just have Thursday, we had the GDP for the New Zealand, which came out negative. Super bearish for NZD. Let's go. New Zealand GDP is under the economic performance. Just paste there. I have seen it's negative 0.9 all the way from. What was the forecast? The forecast was around. Yes, negative 0.3, and from the base 0.9. Okay, 0.3 all the way from 0.9, which is quite drop. Quite drop. So this one is bearish. Super bearish for that pair. Or for that currency. Let me check another one. We shall be having, let me check. So we had the core machinery orders and all that. It became negative for that one. Then we have Australian dollar, employment, and non-employment. If the employment, of course, is low, then unemployment should be very high. So this one, employment change to the industry, Australian dollar, under the labor market. This was up to that position. Somebody will be like, why do you get to record all this? It's because I can predict some data based on these data, few data that I have. And there are the time data which I happen to predict happen to play a very good role when it comes to this one. This is for 5.4K. We can have 5.4. 5.4 negative 5.4 all the way from, which was the forecast? The forecast I have seen, it's 21 2. K. Super bearish for that one. It has now started turning into bearish. Allah. Let me check on the Australian dollar again. 26.5. 26.5. 26.5. Yeah, 26.5K. That's quite okay. Trading is very easy. There are some people who just do trading as a fun, like as a way of fun. I also do it as a fun, but I want to be an economics, just analyst. Yes. So just go to unemployment rate. Unemployment rate remained at that. That is around. Let me see. This is super bearish for that pair, for that currency, I would say. So it's around unemployment 4.2, 4.2, 4.2, 4.2, 4.2, 4.2, then 4.2. So, nice one. So those are the data. I will be analyzing them later, especially on the weekends, so that at least I can get a very good for the next week, bias for the next week. So today, the most important data which I'm waiting for is on the bank. That is now the monetary, about the interest rates. Let me check on the economy, or let me try to understand on the GBP. On the GBP. On the GBP, we have the interest rates which will be coming out. We had the CPI, which was a kind of drop. So there is a high probability we might also get the interest rates either remain or drop. Let me see what's the take on this one. Their focus is to remain the data. They have to they want the data to remain at 4.4, which is quite okay. We might also see it remain there. So we can see now the Canadian dollar JPY is pushing. We are in profits. We can tell we are already in profits, yes. But I remember this one is a long term, so I'll just have to hold the trade. I will hold the trade until we see. So I don't have to close. It's either take profit or stop loss. Again, on the gold trade, these are the only pairs which I trade. Gold, I have already seen that it's now starting to push to the upside, which is super quite well. I'm still holding that trade. I executed the trade after yesterday's press conference. And remember, that kind of a feeling is only when it comes to when you are winning, bro. But when you are losing, you go cry like a kid, bro. So I'm just going to hold those trades. Yes, let's wait. On the Euro Australian dollar, I have no interest on that pair. GBP, Euro GBP, I took that trade on, there was a trade, I think on Tuesday. Yeah, on Tuesday I took this trade and then we cleared the take profit. Then on the Euro JPY, we took this trade and then we managed to bag all these ones. And then price happens to go back into this almost the same price point, then still went back again. Based on the same rule, based on the same strategy. The same channel, the same number of marking. Just wait for the break of structure there, mark the order block. Within that order block, just mark a breakup block within that zone. Boom, let's go. Therefore, on the Canadian dollar versus Japanese yen, I'm just going to hold that trade. On the GBP, JPY, we are waiting for that interest rates to come out. So, having said that, I would say it's a deal. We're just going. I will keep updating, especially the people who are into my number. I don't prefer teaching people. Yes, if you are making money on trading, you should focus on making money. But if I happen to get some people who can really want to maybe to learn the skill from me, quite well. I don't advocate for teaching. Yes, this game is super. And then of course during the day I don't have to listen to the music most of the time. I listen to the Bloomberg, to avoid unnecessary spikes and understand how this kind of so you get to see. So I'll just have to document everything. After that, we shall see how the public kind of trade. Yeah, I don't advocate for teaching. The reason is very very simple, because this game is not for the weak. You gotta be strong. Sometimes you gotta be strong. You will lose money. Yourself. Having said that, I would say it's quite pleasure, you people. You can reach out to me. You can check on the social media. There was a time I was going to live on TikTok. I had to be banned from that. I don't know whether it's because people were reporting me giving the free information. If we turn off all the fundamentals, bro, I couldn't be in a position to trade. Having said that one, so I would say let's call it a day. Let's just call it analysis and then wait for the price to deliver.